Welcome back to Iraqi Dinar Hub. Attention is now squarely on the ticking clock, as excitement surges over a potential contract rate announcement for the Iraqi Dinar, EQD, possibly arriving as early as tomorrow. Across the U.S. and among international holders, this development could shift the entire financial trajectory for thousands of investors. Insider buzz, confidential documents, and abrupt increases in institutional interest have converged, indicating a major update could already be underway in private circles. Market behavior has turned erratic, and several forex tools have detected irregularities consistent with strategic rate preparations. While there's been no official word from the Central Bank of Iraq, CBI, International Monetary Fund, IMF, or key U.S. banks, analysts say we could be witnessing an orchestrated shift in valuation. Could this be the long-awaited breakthrough for dinar speculators? The signals are intensifying, and decisive action may be more crucial now than ever. Financial markets rarely whisper, they roar, and the current signals are impossible to overlook. In the past 72 hours, EQD trading trends have deviated from their usual patterns, displaying notable pressure around potential inflection points. While fluctuations often stem from oil price shifts, regional politics, or Iraqi budget moves, current data suggest a different catalyst to contract rate alignment. Reports claim that Tier 1 banks are holding closed-door strategy meetings while bulk orders of dinar are being postponed or bundled, hinting at backhand recalibration. This suggests preparations are in motion for a rate realignment. Meanwhile, encrypted investor forums have seen a sharp rise in activity, with some insiders suggesting that trial rate locks are being tested in off-ledger systems. If accurate, such steps indicate groundwork being laid before an official disclosure. For vigilant investors, these are not ordinary signals, they're urgent calls to readiness. Beyond the surface-level price charts and ticker readouts, institutional behavior often forecasts the real story. In recent days, confidential communications from U.S. financial institutions, including regional banks and currency trading desks, have revealed that access to large-scale EQD purchases is being increasingly restricted. These aren't simple deals, they're typically early markers of incoming rate changes. Several elite financial planners have disclosed, unofficially, that compliance teams are reviewing foreign exchange guidelines, with specific attention to dinar-related activity. Major players like J.P. Morgan Chase, Wells Fargo, and Bank of America have yet to make public statements, but internal adjustments in their policies are raising eyebrows. When such moves happen pre-announcement, it's usually because the banks are protecting liquidity reserves or aligning operations with central directives. For those with experience in revaluation cycles, these moves resemble previous realignments in other emerging markets. Currency analysts and economists with long-standing involvement in IMF and global development programs have spoken out more frequently about the potential for a dinar contract rate. A contract rate typically refers to a preferential exchange arrangement offered to bulk holders or vetted individuals before the general public rate is revealed. Though CBI has not officially endorsed this structure, informed sources within IMF-related policy spheres suggest that internal briefings have outlined tiered redemption plans. These frameworks tend to reward high-volume holders and early movers who meet compliance standards like CIC validation. Dr. Lionel Warren, a former IMF and World Bank consultant, noted that such rates often precede wider rate disclosures, easing the economic shock of abrupt currency shifts. If this model is in play, tomorrow may not mark a full public revaluation but a contract year rollout to select holders. Those working with licensed dealers or redemption centers may find themselves in line for transformative gains. While the dinar continues to dominate investor attention, the Vietnamese Dong, VND, is quietly positioning for its own resurgence. Vietnam's rapid growth, global export performance, and recent monetary reforms are aligning the VND with the path of reevaluation. Monetary policy in Hanoi has quietly reduced exposure to foreign liabilities and enhanced reserves through gold-backed strategies, mirroring Iraq's recent fiscal posture. Analysts from HSBC and Standard Chartered describe the Dong as one of the most undervalued currencies globally. Add to that ongoing digital finance initiatives and talks of the dollarization, and the IMF has now flagged Vietnam as a possible candidate for structured currency adjustments. Should the IQD rate shift occur tomorrow, the VND may rise in its wake, either in coordinated timing or as a ripple beneficiary. Savvy investors aren't concentrating solely on Iraq, they're structuring holdings for a dual currency opportunity. Zimbabwe's ZWL also finds itself returning to the radar. Once a symbol of economic collapse, the country's new hybrid monetary system, anchored by gold reserves and limited US dollar circulation, is stabilizing the ZWL's position. The introduction of the ZiG, a gold-backed Zimbabwean currency, has been welcomed by global economists and retail investors alike. A growing number of investors see tomorrow's possible IQD contract rate announcement as a potential spark across other frontier currencies. If market confidence in currency reform strengthens, Zimbabwe may experience a revaluation narrative akin to the dinar's early stages. The recent influx of foreign policy support, mining partnerships, and improved financial transparency has provided a backdrop for renewed faith in ZWL. Should the contract rate prove real, markets like Zimbabwe could experience renewed interest, driving capital into previously avoided segments of the currency landscape. Whispers across institutional circles, banking floors, and trader communities now suggest that an official contract rate confirmation for the dinar could be announced within the next 24 hours. The question no longer centers on if but rather when. Intelligence from private wealth advisors indicates that Zoom calls between U.S. financial institutions and Treasury-linked consultants were held last night, focusing on IQD redemption logistics for Tier 1 and Tier 2 holders. While these meetings are under non-disclosure, their timing just hours before a rumored announcement adds credibility to the buzz. Meanwhile, certain foreign exchange dashboards at major banks now feature placeholder fields for IQD and VND rate adjustments. Historically, these system changes emerge 24 to 48 hours before public rate shifts, similar to Kuwait's surprise realignment in the early 1990s. If patterns repeat, the dinar holders may be at the brink of an extraordinary financial transition. As the anticipation window tightens, tactical preparation becomes vital. Currency holders must secure every component of their exchange readiness. First, ensure that your holdings, whether IQD, VND, or ZULA, are verified, labeled, and protected. Original receipts, serial numbers, and protective sleeves should be accounted for. Second, ensure your kite documentation is current. Valid ID, proof of purchase, and bank forms may be needed immediately at redemption. Third, rely only on trusted sources, licensed financial analysts, banks, or vetted news outlets. Avoid unverified social media and Telegram speculation. Fourth, research the foreign currency redemption policies of local and regional banks to avoid day of confusion. Fifth, consider opening or modifying financial structures like trusts or LLCs for post-redemption fund management. And finally, prepare psychologically for major financial change. Calm, informed decision-making will always outperform panic during monetary transitions. Top economists observing revaluation movements have begun publicly weighing in. Dr. Munir al-Adil, a former Iraqi Ministry of Finance advisor, explained that the restructuring of the dinar has long been part of Iraq's sovereign development roadmap. Now, geopolitical stability and economic indicators support a potential value realignment. Similarly, IMF veteran Jane Albright recently suggested in a webcast that contract rates are highly feasible and historically proven methods to regulate market entry during revaluations. Investment analyst Grant Hargrove added that banks prefer contract rates to handle large redemptions with minimal impact on public exchange platforms. These insights solidify growing confidence that we're entering a critical moment. Tomorrow's events may serve not just as speculation, but as execution. The spotlight on the dinar has also increased scrutiny on both the Dong and ZWL, pulling them into parallel consideration. While Iraq's economic landscape is distinct, similarities in policy reform, commodity backing, and anti-valuation provide shared trajectories. Vietnam's ascent in the global manufacturing sector, growing trade alliances, and reduced foreign dependency are now central to its monetary revaluation thesis. At the same time, Zimbabwe's rare earth mineral wealth and gold-backed fiscal model, combined with Chinese trade support, is driving serious consideration of the ZWL's future value. If Iraq confirms a contract rate, the resulting economic ripple could nudge these currencies into revaluation talks either formally or through accelerated investor attention. The emerging thesis is one of synchronized currency reform across undervalued assets. Evidence is mounting that central banks and global finance bodies are moving toward coordinated currency adjustments. The IMF recently revised its working papers to include deeper analysis on undervalued national currencies and post-crisis monetary reform strategies. Concurrently, the Bank for International Settlements has hosted private consultations involving Iraqi, Vietnamese, and Zimbabwean financial representatives. Topics reportedly include sovereign digital currency, hybrid reserve models, and cross-regional FX alignment. While these meetings remain confidential, insiders believe the groundwork is being laid for gradual integration of restructured currencies into the global system. Should Iraq proceed with the contract rate, it would not just be a local milestone, it could be the initial test case for a broader global monetary framework built on fairness and valuation integrity. If a contract rate is confirmed tomorrow, the entire investment environment surrounding the dinar will change overnight. Investors will need to react rapidly at deciding where and how to redeem, and which entities are authorized to process contract year rates. The method of announcement, whether via government bulletins, major banking channels, or IMF notifications, it will shape how quickly holders can respond. Any delay might result in missed access, while rushing without clear verification could create compliance risks. Initial redemptions may come with requirements, volume thresholds, identity vetting, appointment scheduling. Rate disparities between institutions could emerge based on affiliation or redemption tier. Emotional readiness is critical. After years or decades of waiting, those who remain focused and execute the well-planned strategy will emerge ahead of the curve. With the potential announcement now within reach, final stage readiness is non-negotiable. Begin with the portfolio audit to confirm your IQD, VND, and ZWL holdings are documented and verified. Then, closely monitor trusted financial sites and news portals over the next 24 hours. Avoid unofficial chatter. Contact your bank or dealer to confirm their foreign exchange procedures regarding revaluation currencies. Assemble a redemption checklist including ID, appointment confirmations, transport logistics, and follow-up consultations. Consider scheduling time with a financial planner or tax expert post-exchange. Above all, prepare mentally for what lies ahead. A sudden liquidity can be both a blessing and a challenge. The most successful investors aren't just preparing for the event, they're preparing for the life that follows. The years of holding and hoping on speculative currency investments may finally be yielding a tangible shift. Market trends, expert analysis, institutional positioning, and global coordination efforts are all pointing to a potential contract rate revelation within hours. For those who have held firm through misinformation, skepticism, and delay, this may be the defining moment. But timing and preparation are everything. Whether tomorrow brings a full contract confirmation or just the first step in a larger rollout, the door to strategic action is closing fast. Investors across Iraq, Vietnam, Zimbabwe, and the U.S. must now operate with clarity. Are your assets organized? Are your exchange routes clear? Are you mentally calibrated for what's next? This is more than a currency shift, it may be the start of a financial realignment. If the dinar triggers the first domino, the rest may soon follow. Thanks for tuning into Iraqi Dinar Hub. If tomorrow truly brings a contract rate confirmation, everything we've prepared for could finally take shape. Remember, this isn't just about exchange rates, it's about financial readiness, strategic timing, and protecting the wealth you've positioned for. Stay focused, stay informed, and stay connected to credible sources. Be sure to like, subscribe, and hit the notification bell so you don't miss critical updates as they break. This journey may be reaching its climax, but for the prepared investor, it's just the beginning. We'll see you on the other side of history.